else. I don't know. Okay. Well, time to have a look at the markets picture for now. Asian markets at this particular point, it's a bit of a mixed reaction in terms of the events playing out on that particular front. We did have August trade data coming in from China. It happened to beat expectations from analysts, which has been seen as a good thing. Overall sentiment, again, it's the theme of tapering flowing through for the rest of the week as we look at what's happening in terms of what investors are paying attention to. But when we look at what's going on in the US, investors are going to be looking forward to the market open after the market close yesterday, where the US were celebrating Labor Day. So it's going to be full force working on that particular front of things, analyzing numbers and looking at how things from an economic data point of view might be able to give us an assessment in terms of where we're going when it comes to the pace of global growth. Again, it's the concerns that are happening around, China-US possible tensions in terms of some of the listing requirements that Chinese companies want to impose on Chinese listed firms wanting to list in the US. So those are some of the patterns that we're going to be following through for the rest of the week. But to talk to us about some of the themes playing out locally, we are joined by Martin Smith, who is an analyst at Anchor Capital. Martin, thank you so much for your time. Let's talk about the JSE performance right now. We've had a couple of numbers from Imperial. We've had ShopRite. How is the JSE All Share looking right now? And then we'll get into the actual results.
Yeah, absolutely. So if we look at the JSE, it looks like it's had a little bit of a bounce back. It was obviously down a little bit yesterday, and a couple of reasons for that. There's obviously a lot of reasons for that, but the two kind of predominant ones are what we've seen from the Rand. The Rand's having a little bit of a snapback, now at about 14.35 odd at the time of this conversation. And obviously that's been very productive for resource counters who have been a lot more positive today than they were yesterday. There's quite a strong sell-off. So that's the one positive impact. The other thing is from the Naspers kind of 10-cent process kind of bundle. You've seen Naspers bounce back quite nicely along with process on the back of what we've seen out of 10-cent. 10-cent up strongly today. So positive in the green, and hopefully it continues, I guess.
Right. What do you make of SA results season so far?
So I think the results have been better than expected. I think if we kind of look kind of 6 to 12 months kind of backward looking and say, where did we think we'd end up? I think we ended up ahead of expectations. And I think that's due to a couple of things. I think management teams have done incredibly well specifically from a cost cutting perspective. They've tied up their balance sheets. And I think a lot of the management teams have just managed the kind of crisis very, very well. So I think we're better than expected. It's going to be interesting to see where we go from here. I think quite a nice proxy is if you look at something like a Bidvest. A Bidvest is quite a nice proxy for kind of South African GDP. And their results are probably the earnings that they're achieving now at this kind of next financial year end is probably only 10 to 15% off of where it was at the end of the FY19 period. So I think that speaks quite nicely to how well management teams and kind of the South African economy has weathered the storm, I think. But again, it's looking forward, which is going to be the interesting part. And you might lead into the kind of question about the SA GDP numbers that came out, but I'll leave that to you.
Right. So everyone's been talking about Fed tapering, and this is the conversation I had with my analyst yesterday, Gary Boyson, in terms of what extent are you following the ECB's, journey towards tapering versus the Fed?
Yeah, so it's interesting. Obviously, there's some kind of commonality between why both kind of central banks have done what they've done. It's an emergency lever that they've pulled in a kind of crisis situation on the back of COVID. And both of them are essentially waiting for the economies to recover to kind of sustainable kind of levels before they kind of pull that off. So that's the kind of commonality around. There are some nuances to it. So I think what we've seen out of the ECB is they probably need slightly less from a QE perspective because they've got a very big social kind of network in terms of the support that they offer their people and social grants and relative to the States. So the States had to be a little bit more aggressive with theirs, which obviously comes with other things like inflation kicking up a little higher than what we've seen in the ECB, in the EU. So there's a couple nuances. I guess it's one you've got to keep an eye out for, and I think it is coming. I think we still have a little bit of time for it to play out in the EU. They think it'll probably kind of continue till the end of March next year, but I think we will hear, maybe not on Thursday when they meet, but maybe towards December about when they're going to start bringing back that QE.
So Steinhoff, made news yesterday, and here's my fun question for you. When was the last time you've looked at Steinhoff's financials?
A fun question around Steinhoff. It makes me very nervous. No, it's such a valid kind of comment, because I can chat with the guys here at the office and other analysts. People, I know it's quite like you almost don't want to look at it, because to make fundamental investment decisions, you need to know exactly what you're going into and exactly what each business has on their balance sheet, liabilities, et cetera, et cetera. And with the Steinhoff, there's still this massive element of unknown. So for me, Steinhoff is essentially uninvestable for my clients at this moment in time. So it is a function of putting my time and effort where there are investable ideas. So last time I looked at Steinhoff's kind of actual numbers, pre the kind of news that broke around Marcus Jooste and the like a couple of years ago, I'd say is the honest answer.
Before I let you go, I would think the key theme is tapering for the rest of the week. But from your perspective, what is the key theme for the week for markets? Is it tapering or something else?
So a couple of things. I'm obviously keeping quite a close eye on what's happening out of China, both from a kind of regulation perspective. We've obviously seen that come out over the last kind of month or two quite significantly. You mentioned it coming online around Chinese stocks and their listings in the US. I think that's also very important. But like you said, tapering is important. I'm watching the rand and what the commodity prices are doing as well. And I think the last thing is you always just have to have an eye on COVID numbers and Delta variants and vaccines, and just to see how that plays out, because that could also potentially throw a spanner in the works. But so far, it's looking relatively positive from a vaccination perspective and the like. So let's just hold thumbs and hope that continues.
So speaking of holding thumbs and hoping that continues, and I know I said I'll let you go at this point, but I'm curious to know the spread of the Delta variant and the vaccination rates and the ramp up thereof. How much of that does it form part of your conversations with your colleagues in terms of when the world can get back to a new normal? I'm not even going to use the word normal, just the new normal.
Yeah, so I think obviously markets are forward-looking, and we need to be forward-looking in our kind of analysis and decision-making. So at this moment in time, it looks like things are starting to play out. You look at the UK, the US to a slightly lesser extent, and maybe something like Israel, to kind of see how essentially the death rates or the death percentages have kind of spiraled downwards on the back of vaccinations. That's been quite a positive thing for us. And until that theme changes, I think we're going to kind of continue with the view that the world is returning to normal. And I think there are still opportunities. And that also kind of forms our opportunity base, because if the world returns to normal, there are really good opportunities kind of specifically offshore and the like. So I think for now, you've got to have a base case. The base case looks like things are shifting back to a new normal. But again, it's so hard to call, and you just got to keep an eye on the news and just make sure things are kind of progressing the way they like. You've obviously also seen the third dose of Pfizer has been kind of accepted in the States, and that's going to be a thing, as will the booster shot. So things are looking positive, but you've always got to keep an eye on. We don't know.
Martin, thank you so much for your time. That is Martin Smith, who is a portfolio manager at Anchor Capital. The next story that, we're going to be looking at quite interestingly is, of course, ShopRite. And that particular company published their financials, and it is quite interesting to see what is happening in that particular front. But we're going to take a quick break, and when we come back, we'll speak with